Welcome to Market Bullets, your go-to source for insightful investing and stock market analysis. In today's episode, we are diving deep into the world of gold investment that recently has gone through a kind of a roller coaster on the stock market. So if you wondered about intricacies of investing in precious metal like gold, right now that's the right place. So there will be an expert analysis on gold. There will be also the digital gold, so I mean Bitcoin, and we will go through the kind of a world of investing of a little bit of wider perspective. So you will have everything what you're looking for in order to get updated on what's going on. So take a seat, subscribe to our channel, and let's explore the golden opportunities in the world of finance together. So we are just jumping to first element, what's next for gold. So this presentation was brought to you by Wall Street Station. This should be 13th of December, as yesterday I couldn't really manage to broadcast it through, but the date is of yesterday, but the data is updated to today's trading day. So we are just jumping, equities growth continues, and we are just going through, maybe I will just make a laser pointer and let me just jump right to this. So you can find right here, equities growth continues, and stocks have looked overbought back in the beginning of December. Right now it looks like that was just the time consolidation, time correction that happens often in a kind of a very hot markets. So November's everything rally is turning into a bond surge as well, raising concerns of overbought stocks, but right now it's still the bulls in the dominant power on the market. So dovish ECB also comments and weak US labor data revive rate cut bets. Equities, notably the S&P 500, has been quieter, but right now regaining the power. How long could it last? I don't know, but stock volatility versus bond swings is lowest since 1990s, and that may spark a reversal. But could it happen now? We cannot say that. So it looks like there might be a Goldilocks zone for a economy where everything may go through very softly when it comes to the recessive period. There won't be any jolts ahead, and the recent phenomena on the market may be turmoil engulfing, and eventually this cascade of difficult to swallow news may not eventually reappear. We are right now going to comprehend what's going on with the market overall, and you can find right here that winning recession bet is by Bill Gross this time, that striked gold, $5 million in profit on bold bond bet. So when everyone is scared, these sharks as Bill Ackman, Druckenmiller, Bill Gross are just profiting off. So Gross already earned the moniker of Bond King, while at Pacific Investment Management Corporation, and the firm that has co-founded in the early 1970s just reached enormous gains already, and right now Bill Gross is right here, right now, to take some of the profit of the table. So that's his rally, that's his bet, and that also what right now is been seen in the market is that this bond market is about to in its inflection point, and more of the crowd will follow those large investors that were betting for reversal. Right now, let's jump. Sorry, as I'm just turning on right now the gold chart, but it's not about this right now. Let's have a look at treasury issuance and Fed tightening that have drained reserves. So how long can this bull market last? That's the question. Right now we are draining out of this liquidity, and it may last up to supposedly the end of first quarter of 2024. So banks maintain high reserves despite Fed actions in treasury borrowing. Money markets shift from lending to the Fed into investing in treasury bills, and the real challenge arises when money market funds decide what they have withdrawn enough. Fed's new defense is crucial in a transformed landscape where most money moves through secured lending via repos, and banks are big borrowers from money market funds, and it may eventually get changed. So repo flows works like this. Cash investors are just paying in cash to dealers, then to prime services, clients, hedge funds, commercial banks, and then it's reversed through securities. And with this repo market being drained, we may have a little bit of concern about whether this lack of liquidity may ripple through over other sectors that may have eventually a monstrous effect on its valuations, and it may eventually be worth shattering. So right here I have just so banking on confidence. There is still some of the investors that banking on confidence is the one thing to go through this recession unscathed and possible recession unscathed, whereas the democracy is right now owning stocks at mass. Big US banks restricted repo lending in 2019, causing concerns for leverage-hungry clients. The Fed's new standing repo facility allows banks to offload borrowing demands to the Fed, avoiding stigma associated with direct borrowing. And similar to the Bank of England's initiative, these programs signal when central banks reach the low point of required reserves. And right now, that situation that I just described doesn't really scare off the investor itself, and we are looking like this market bull may persist for longer. Why do I just changing this for mistakenly? Let me just make it out. All right, so we are right now jumping to Bitcoin. Bitcoin recently stole the show, but right now is correcting. So this discrepancy between Nasdaq and US and this Bitcoin is enlarging. So it means that right now it looks like the bulls on the Bitcoin market has returned, and that's why you may have a very nice alpha in putting the Bitcoin in your portfolio. As a reminder, that's something that you have possibly just found out. Let me just turn on the screen. So it looks like, just give me a sec. All right, so I prepared such of a graph. So if you want to get updated on the latest news on the market, just check out this channel, Wall Street Station, on Twitter, and I'm just preparing very knowledgeable infographics about what's going on in the world. This time I just shocked the world, the events that shocked the world last week, and among that there was a non-farm payrolls, also job openings, and GDP growth rate, balance of trade of Australia, and ISM services PMI and unemployment rate. These are just kind of tidbits on what's happened on the market. If you just want to be updated, just get through this and find out by yourself on Wall Street Station channel on Twitter. In the meanwhile, we are just returning back to our transmission. Let me just find out what's going on right there. All right, so you can find right here that Bitcoin 6-day winning through December 5th is longest since May this year, and pushing the boost hopes even higher. And there will be a very nice infograph on our Twitter watch station tomorrow, so don't miss it, as I will get you updated through the things that are spurring hopes for this great bull market to come in 2024 on Bitcoin. And we are getting to gold's roller coaster. So digital kind hasn't really delivered on its inflation hedge claims since COVID, and that you can what you can find right here is this discrepancy between Bitcoin and gold. Right now, Bitcoin is catching up the gold, so it is very interesting how this relationship may eventually look like, will be eventually closely knit in this 2024 kind of a shaky, if you ask me, shaky month, shaky year to happen. And will the gold find its golden path to $3,000? This will be a question for right now. However, as the things happen very quickly, gold broken 2,100, then broke it again from the upside, and right now there is a thought-provoking element of where the gold may go right from here. So for this to happen, I will just send you to another element that say our interactive chart on trading view, and on daily chart, look at this engulfing pattern, that has really liquidated all of the longs right there that were opening positions right even up to 2,150. In the meanwhile, after such of a pivotal moment, we need to go downwards. The first stop will be seen right at the 1947, somewhere in this around. We should find a kind of a demand zone. If it won't happen, as I do expect, we will make a kind of a possible head in this head and shoulders pattern. Supposedly we will go through a kind of a path. We may even get through lower 1820s. However, the economic background for gold to rise, I mean disinflation and interest rate cuts, is favoring gold anyway, but it may already be intact in price. So gold's wide right may eventually end up right at this level, at least for now, unless any type of geopolitical turmoil will take place, and the bears will start again to be more vocal. So right now we are suffering from unusual market behavior as gold breaks records and faces in kind of a trap, a liquidity trap. So this historical surge is tied to central bank easing and money supply growth. But what will happen next? We'll just have a look at our transmission. So for presentation, I'm just jumping to another element that's a kind of a path of for gold to get through this very shaky decade ahead. And for this, there are some models that are expecting the gold to be traded at around 3,000, and even in the longer path, $10,000. Yes, if this quantitative easing take place and the bailout eventually be intact of Fed, we may have such of evaluations been seen. So right now, however, there is still much of a burst to get through. The liquidity zone that we have just met on the previous former Monday right now is showing that the bearish side is more stronger now, and this spookily drawn engulfing pattern may eventually weigh on the valuation of gold for longer. However, this trajectory may be yet visible somewhere in the longer run. In terms of the central banks that are right now have been rushing gold, yes, we've seen such of a rush in 2023, but will it persist in 2024 is still yet to cover. But that's why we are just broadcasting our transmissions on Wall Street Station. So if you haven't subscribed, you may do it right now if you're enjoying the content. Also hit this like button, and we are just returning tomorrow. Thank you very much for watching. Let me know, what do you think about the gold? Will we manage to hit this all-time highs and beat this 2000 in 2024? I'm very curious to find out what's your stance. In the meanwhile, thank you very much.